This week, we're looking at potential beneficiaries of artificial intelligence beyond the tech companies building it out. The market has already rewarded many of the direct AI model and infrastructure winners, but over time, we expect opportunities in industries where AI can reduce costs, improve productivity, and compress long development cycles. We think that biopharma sits near the top of this list. Biopharma has many of the operational characteristics where AI should matter. Looking across the 1,000 largest publicly traded U.S. firms in the Russell 1000 Index, the biotech and pharmaceuticals industry ranks near the top in terms of research and development spending as a percentage of sales. The median company in the group spends more than 20% of sales in R&D and close to another 25% on overhead expenses. That's a massive cost base and more than double the median firm in the Russell Index. If AI can make part of that work more efficient, it will have an outsized impact in biopharma relative to almost all other industries. And that's not to say anything yet about AI-driven enhancements in drug discovery. The case for AI-driven improvement in the clinical process is compelling because the industry has a clear productivity problem. Over the past decade, inflation-adjusted pharma research and development spending has continued to rise, surpassing $250 billion. But the number of new clinical trials initiated each year has been roughly flat, and the probability that a drug ultimately makes it from early testing to regulatory approval has remained low, at just 13%. Simply put, the industry is spending more money to pursue a similar number of drugs with no meaningful improvement in the rate of success. In theory, this is the type of problem where artificial intelligence could matter. Drug development is full of complex data challenges, from molecular design to toxicity prediction to patient matching. These are the type of problems where AI could help companies make better decisions earlier in the development process. Even modest improvements in success rates could meaningfully change the economics of the industry. A few recent developments are also starting to bring investor attention back to the sector. Eli Lilly's new weight loss drug, retatrutide, showed nearly 30% average weight loss in late-stage trials recently, approaching results historically associated with bariatric surgery. And last week, Verve Therapeutics reported a one-time gene editing treatment cut LDL cholesterol by up to 62%, with durability measured out to 18 months. Neither of these is an AI story, but both are examples of the kind of scientific progress that can draw capital back to the sector. On the AI side, Isomorphic Labs, a drug discovery company spun out of Google's DeepMind, just raised $2.1 billion to scale its AI-driven drug design platform. And earlier this year, Eli Lilly partnered with NVIDIA, which highlights how large pharma companies are beginning to apply AI more directly to research and development. Other firms such as Novartis are also investing heavily in AI capabilities, and several well-funded private firms, in addition to Isomorphic, are developing AI models specifically geared toward drug discovery and clinical efficiency. We think that biopharma sits at the intersection of real scientific innovation and accelerating progress in AI capabilities and investment. Despite recent strength in biopharma stocks, the sector has materially underperformed the broader market over the past 5 years. Over that time, the major pharma index has trailed the S&P 500 by roughly 64 percentage points, while the biotech index is trailed by 73 percentage points. However, the setup is improving. AI adoption could help address the productivity problems we discussed earlier, while merger and acquisition activity is also picking up. First quarter 2026 biotech deal value reached $84 billion, up from $44 billion a year earlier. A big driver is the looming patent cliff, with roughly $300 billion of annual drug sales exposed to the loss of exclusivity by 2032. The big companies need the small ones to help replenish their pipelines. And after a period of recent turmoil, stability at the FDA, along with a more pro-innovation stance, is helping remove a major regulatory overhang. To be sure, the sector still carries risks, chief among them clinical development variables. But the improved sector fundamentals, coupled with potential operational enhancements from AI, are creating a constructive investment backdrop. Please feel free to reach out if interested in discussing potential investment ideas or if you have any questions. Thank you and have a great weekend.